Guys, this is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on New Zealand dollar versus US dollar. As you can see, we took a position after that down day. I know it's been a day since I updated you guys, but we talked about it in the previous episode. What are some buying conditions that you would look for if you're entering a bullish trend? One of those ideas, very simply, was buying after a down day. You can see we had a down day here on Tuesday. The following day, you could be looking to go long, and we did. We went long, and as you can see, now price is pushing up, taking out previous daily highs, and looking for that IPTA 20-day look-back high. So pretty much August's high. That's the monthly high for last month. It's looking to aim for that. So we're getting closer to that. And as you can see, that idea and that narrative of this being a false break and it quickly repricing and taking out a swing high, we could have been very aggressive on looking for longs, and we were successful with that. We can see a higher swing low is coming into play. So today, Thursday, price dropped down, and now we can see it rallied up and looks like it's going to have a higher close for the day. And the next day, maybe Friday, is going to have a higher low on the right side of this candle. So it would look something along the lines like this, right? The next day will probably trade up. It may not take out the high. It may actually make Thursday might be the high of the week, possibly, right? Making a swing high formation, a higher swing high in a bullish trend, and a higher swing low. So this could be, right, just taking an educated guess, this could be a higher swing low that price action is not likely wanting to raid because it's trying to trend. Not saying it's out of question. It could come back down again. It could come back down and raid it and then possibly find, headwind or wind underneath its tail to continue moving higher. But this is the idea that I'm taking because of the way the market forms. This is typically what you will see from a bullish trend. You're not going to see the market give lower highs and lower swing lows in a bullish trend. It's going to give higher swing highs and higher lows. That's a very simple, basic formula when it comes to finding a bullish trend. You can see there will be moments where it raids a low and sponsor longs again. They will do that. They will raid previous daily lows because of a swing formation, right? Swing low, 1, 2, 3. One of those candles has to raid a previous daily low in order for it to be a swing. Now, if we take a look at dollar, right, you see the bond yields dropping. The Feds are likely going to cut possibly in the fall or even winter, which means what? Dollar fiat itself is going to be devalued. It's going to be less sought after because the rates are going lower. Bond yields are going lower as well. Let's take a look at DXY briefly. So you take a look here. Dollar created what? A swing formation. It's starting to form. 1, 2, right? This is the high. It takes out the previous daily low. We need that Friday candle not to raid that high. If it does, it's okay. Maybe it's just forming a later swing high, lower swing high, and we want to see it continue going lower and taking out what? This swing low, because that's sell side down there too. So we already got here. Now we're possibly aiming here and then looking for that 40-day look back low too as well. So we already took out the 20-day look back low, that 40-day low, right? Actually, no, it's not July's low, but that 40-day look back low here. Price is mostly going to aim for that. Take a look at gold. You got to look at the correlations and see what's going on. Right? You're not always going to get the trend right immediately, but you will want to be in sync with the market and correlations. Gold's going higher, dollar should be going lower. You had a down day, buying happened. Then we have previous day low rated. Price is probably going to look to make that swing point again inside a PD array. Notice most of the swing points will form around some type of PD array, especially inefficiency. See that fair value gap? It's going to make a swing low inside of it and try to trade higher. Not saying it's going to be perfectly inside here, because sometimes you'll see the swing low might go inside here, come out of it, and then go back up. Everything's not perfect, but we know within this region, we should see sponsorship of wanting price action to be held higher. That's just the educated guess in the scenario that we would like for it to form. Look at GU. Right, signs of it going higher. Again, down candle, buying is coming in. We finally got to that smash candle high, and now we're looking to push higher to what? Swing highs. Anything that's a swing high, buy side, buy side, buy side. Dollar's going lower. The narrative is not higher dollar right now. Definitely not right now. Let's see what else we got. AU, higher. Look at AU, rocket ship right now, right? Go back and watch those previous episodes. It's a lot of value that I'm putting out here for you guys, so you guys can understand it step by step. Look at that swing low. It formed below the monthly open. That's the opening price. It formed below that. Look at the swing low. 1, 2, 3. This is the low of the month. Now, after every down day, we can take the educated guess that we could find some type of sponsorship or long. Look at that small range candle. Small cycle, large cycle kicks up. People want to know how to catch these large days, but they're not patient enough to sit here and allow price action to go about its journey. we had to wait for a small day to potentially catch this large move here, which is what we're seeing for all the majors against the dollar. U-Swissy inverse. Lower swing high is pending here, right? We're getting a lower swing high. It's interesting to see the code of the market. UCAD should be looking to go lower. Ooh, it came back up. It took out a high. Looks like it's looking to go lower now. All right. What else do we have? EU. Swing low. Look, it's trying to make a higher swing low. That's the lower swing low. Higher swing low right there. Trying to form it. Friday. We don't want Friday to take out its low. But if it does take out its low, listen to what I'm trying to tell you. If it does take out that low, it's okay. As long as we get maybe Monday or Tuesday to come back up and create a higher swing low formation without taking out that low. But if it does take out that lower swing low, then we can then say to ourselves, is this going to be a false break when it breaks that low? Sorry for the silly drawing. And go back up higher, just like how we saw for NU. Or is it actually going to follow that bearish momentum break and continue to print a lower swing high instead? You see how simple this can be if we just take it down in bite-sized pieces? We don't have to get everything correct. And we don't have to aggressively trade if we don't understand where the next swing point is forming. We take it easy. Let's recap before we end this, because I got to run. So we got a higher swing low forming, potentially, and we're going to just hold. You can buy after any down days going into this, right? You want to pyramid into the trade idea, buy after any down days. You can see this day was small. Tuesday was small compared to Monday. Monday was large, Tuesday small. Now we're kicking back into a large cycle, okay? That's natural price action. That's organic. I can't preach this enough. You need to study price action without indicators. It is detrimental to the development of traders, especially new traders that have no idea what they're talking about or what they're looking at. You need to look at this price action in its rawest form. There's no context. Look at the no context. Here's the context. No context? Here's the context. Leave the indicators alone. Go on a 15-minute chart just to look at what we had intraday. Again, buying conditions. If you're going to be a buyer, what do you buy? You buy below the Asian session low. Look at that. The Asian session low. I told the paid group, right, the Discord channel, that I wanted this day here to be rated. This Tuesday low, that's where I wanted to buy. That Asian low, because there's sell side there, and it was around the PD array. This day, I really wanted to catch the long, but I wasn't able to. But today, we were able to catch the longs. Now we're going higher. Right, this is amazing. We have buying below the Asian low or buying the breakout above the Asian high. There's always two ways to get into the market long. And the same can be said vice versa if you're bearish. You're going to buy the Asian low or buy the breakout. Peace.